YouTubers? Mike Martin's here, Mike Martin's channel. I want to send everyone a big hug and a very special warm welcome for joining me today in Trends in the Housing Market. Very special makeup edition for last Wednesday's show. Unfortunately, my show was flagged last Wednesday, and I'm pretty choked. If you ask me, I'm really upset that my show was flagged last Wednesday. I did a lot of work. I did a lot of preparation, a lot of great articles. A lot of people liked it. It was actually really well put together. And unfortunately, I was flagged. I was taken down. And then it's still up for review. I'm trying to see what it is I said in the video, or who I said, or what I offended, or didn't go into anything very specific. I just went into different cities, what's happening, and articles you guys send me here. Don't forget, send me articles. You could follow me on what's the Instagram if you want. You guys could follow me on different media platforms. If you go to the top of my YouTube channel, you'll see a Facebook fan page. You could message me on that page. That page is in Portuguese, so don't freak out, because I'm very popular in the Portuguese culture, but don't freak out when you see it in Portuguese, please, when I auto-respond in Portuguese. Anyways, guys, trends in the housing market today, September 11th, a date that will live in infamy for a lot of people. And there's lots happening in the housing market, and I want to do a few plugs here. It's very important that we do plugs, because I'm starting to realize, or starting to see, that housing news is starting to go underground now. It's starting to become people like me and Mario DeCetti's here, Gerald Salente. A lot of guys are starting to have to, it's starting to go underground. A lot of the mainstream media is kind of not wanting to cover news anymore. You know what I'm saying? And it's interesting, you know, how it's a big deal and it's affecting every Canadian that lives in Canada. And especially Canadian propers, especially the Canadian proper that bought in the last 5 to 10 years, or 5 years. Let's just be safe and say 5 years. It's going to affect everyone, and it's not making the headlines like it should. It's not taking the brunt. It's not on the front page, you know. I don't know how serious things have to get before things get to that level, you know. Anyways, someone's asking me, how's the smoke in Merritt? There's no smoke. It's fall. It's beautiful blue skies. I got all my windows open here. I got my blinds open here, letting some natural light in. You're viewing this, people, with natural lighting. And blue, beautiful skies, sunny. It's like 28 outside. Really nice day. And yes, I wanted to bring you some trends in the housing market early today, special Monday edition. Makeup edition for people that missed the show and then couldn't see the show. Anyways, I also want to send out a very special shout outs to Alexander. He is from Las Cruces, New Mexico. He loves the show, and he wants to let people know, like, you know, that he watches the show, tells his friend about it, watches my rants and lifestyle, watches, like. And he says, basically, oh, let's see what Mike has to say today. Let's see what Mike's talking about today. Oh, did you hear what Mike said? So it's good. It's good. It's good. So that's from Alexander from Las Cruces, New Mexico, who loves watching my show. I appreciate that. You know what I'm saying? And he thinks it's cool that I speak Spanish, like, really well. And, you know. Anyways, let's do some plugs here. So I'm gonna have a thing on my show now. Anytime you plug me, okay, and mention me in a video, I will mention you in a video, and you send me the link to my YouTube channel to one of my most recent videos, and I will plug you back. I will go back and say, this channel here, check out what they got going on. Let's see their point of view, you know. And maybe you could go against of what I'm saying, which is fine. It's no problem with that. But everyone is entitled to their own opinion. I think that's anything anyone's entitled to is their opinion, right? And I hope that people could plug. Let's plug each other. This is Mario DeCetti's right here. And he's talking about pensions, housing crisis. He's boots on the ground in the Eastern Canada, in the Toronto, Barrie, Cayuga, you know, Oakville, Brampton. He's basically on the east part of Canada, in Ontario, following what's going on and understanding and teaching people what's going on. And he's just commented. He just commented, "Hey brother, hope you're doing well. Don't worry, you will get back in the groove. I'm doing a video soon with a chart gas, bank rates, dollar, and unemployment in the last 10 years. That's really good. So guys, tune into that later. He'll be uploading it to his channel. I'll get him to call into the show one time if he wants to come in and discuss what's happening in the housing market out east. We do get the articles out here. We do get the but then it goes back to, what do articles mean if they're not really covering it and everything's really going underground? You know, a majority of the major articles I'm finding now are through blogs. You can't really find anything that really wants to, no one wants to put their necks out. A lot of the, how do you say, companies like news and programs and whatever, educational, no one wants to put their necks on the line. They don't want to be the ones to see they're saying this and it's not happening, because a lot of people don't want to be the blamed for saying something's going to happen and it doesn't. But everyone knows what the inevitable is, right? And Walking Journey, he's down in from Hurricane Harvey there, Walking Journey channel. Also discusses from time to time housing. Also discusses why he left California to move to Texas. He also discusses basically coverage, storm coverage, really good storm coverage there. He's boots on the ground in Southeast Texas. And poor guy, he's was debating to go to Dallas because the storm was moving so slow. Everything was filling with water. But you know what? It looks like everything's starting to recede. It looks like things are going to be falling into place. I strongly recommend to watch the Walking Journey channel and from time to time see what's going on in his neck of the woods. Let's move on. Watson Estates, really good channel. Works in the real estate market, understands what's going on in the market. Really good guy to watch. Sorry, I gotta wet my beak there. Talking too much. Watson Estates. And I got any comments already? People are asking questions here. Yeah, Mike, you're going a little crazy here with the YouTube. Why live at 3:30 in the afternoon? Well, you know what? It's my day off. I got nothing going on. I already did some shopping, ran a few errands. It's nice outside. I got all the windows open, and I feel like connecting, you know? Yeah, so, anyways, Mario's calling, the real man that started the crusade. Love this. Hope you and the wife's food place doing well. We're all doing well. Everyone's doing well. Follow us in our Living the Dream series. So Watson Estates, doing a plug for him. Mention me in your videos and you will get a plug from me every time. Now, let's start with this. I don't know if you guys remember on my show, I don't know, like 4 months ago, we had a discussion about who commutes the furthest to work. And a couple of people said about 60, 80 kilometers, which is about 50 miles, 55 miles. This lady here, this is from yesterday's date, commutes 200-kilometer commute to work, and she claims that it is worth it. Sorry, somebody's calling me now. That she claims that it is worth it for her. It is worth it for a cheap mortgage. Is it 2-hour commute? Is it oh wow, 200 kilometers? Let's say 2.5 hour commute there. 2.5. That's 5 hours. 5 hours traveling for work to go and come back. So a few months back we were discussing this, and I wanted to know what you guys thought about this. So Tammy Hurst Enrisk said she's having more than $400 she's saving more than $400 a month by living in St. Thomas by commuting to Toronto. Oh my God, I would pay $400 a month more to not spend 5 hours on the road. Think of the fuel. Think of the fuel she's spending. 200 commute to work. So is it there and back? Let's find out. Let's read this article. I got to read this article, guys. 11 months ago, Tanny Hurst and Christ, I can't even pronounce her name, ditched the Toronto housing market and bought a house in St. Thomas, Ontario. But she kept her job in the big city. That means that 3 days a week, she wakes up at 4, drives at least 2 hours to be at work for 7. So it's 2 hours one side. And at the end of the day, it's another 2 hours home. Give me a second to digest this because... yeah, just give me a few seconds. I gotta just process this because, yeah. So someone is commenting here. Yeah, there's $100 in fuel. Yeah, no, it won't be $100, but it's a lot of fuel, right? That means 3 days a week. She wakes up at 4, drives at least 2 hours to be at work for 7, and at the end of the day, it's another 2 hours home. What is she getting paid? Because if she's getting paid, like, let's take a step back. If she's getting paid like $700-800 a day at work, maybe $1,000 a day, depending if she's doing some brokerage thing, you never know, guys. You never know. Then, yeah, I could see maybe it being worth it. Okay, I'm making $1,000 a day. Go in, come back. You know what I'm saying? Do it half the year. You know what I'm saying? Make $180,000 a year. You know, I could see this happening. I think I would do that for $1,000 a day. That means 3-day work week. Okay, it's a little. I drink a lot of coffee. It's a problem, said Tammy, who explains her inexpensive mortgage makes a long drive worthwhile. It's $400. If you go grocery shopping and you buy meat, let's say you add meat, an actual substance to your grocery list of food, actual food, it's $300 for a family of 4 or 5. For the week, if you actually buy real food and you're not buying Mickey Mouse stuff and snacks and stuff. You know what I'm saying? Let's keep going here. Walking Journey just called, said, hoping to be on the show. Yeah, I'll have you on the Rants and Lifestyle show. Walking Journey, we'll have you on maybe on Wednesday or Friday or something. I'll do a Rants and Lifestyle, or Sunday. Actually, Sunday would be good. Yeah, so Mr. Robot saying, who is another contributor to the channel, saying that she is not factoring the cost of time in her calculation. Yeah, so this is crazy. So this made the news. So affordability, they agree, was the big selling point. When I realized that I could own a house in St. Thomas for about $400 a month compared to renting a small apartment in Toronto, that was a pretty big eye-opener. Cheap mortgage to closet... close to closet space, close to family equals worth it. The social media manager. So she's a social media manager. So it looks like something that might be worth it. You know what I'm saying? Less than a year ago, when she fell in love with a 3-bedroom Victorian home, the mortgage costs her $800 a month, a steal, and compared to $1,200 she spent on her apartment. I guess she was renting. The average home price in Toronto in July is $775,000 compared with the $323,000 in London St. Thomas, according to London St. Thomas Association of Realtors. But price wasn't the only factor. Hurst Erickson's decision to commute 200-kilometer one way to work. She now lives closer to her sister and young nephews and can play a role in their lives. Very interesting. I saw an emergency list on my sister's fridge, and I was on it because I am over 2.5 hours away. I was like, "What?" The catch, you've gotta love to drive. You gotta love driving. So, anyways, the article's there, guys. If you want to read it, I want to know what I'm just lost for words. I can't even focus. Driving 200 kilometers one side. And for my friends listening to this, I'd recommend, in the States, my friends in the States listening to this, sorry, that's about 130 miles one side per day. So I want to know what you guys think about that, because this is, yeah. I mean, she's saving $400. I'd pay the $400 not to. You know, who would want to save $400 to drive? Let's say it's a 5-day week, right? 5-day work week. That's 1,000 kilometers in 5 days. Anyways. And, yes, somebody from New York. Yes. Kevin, my man Kevin from New York. How's it going, buddy? I know it's early there, so everyone's seeing my face early in the day. They're like, what the hell's going on here? Yeah, everyone's seeing my face. I might do trends early Mondays, so everyone on the East Coast and living in Europe and other parts could actually catch this show at a proper time. And yeah, let me know what you think of that. Let's move on. So this is what I was talking in the last show where my show got flagged. Rising interest rates could spell trouble for home equity loans. Okay, now, what I said in the last show, a normal market in housing, anywhere on the planet, normal rates, a healthy rate, is 4.5%. It's normal. Now, everything goes up a quarter or a half a percent or a percent, people are freaking. And especially people with variable rate mortgages, and I've been talking about this variable rate crap for ages. That is something you don't sign on the dotted line when it comes to variable rate. You don't want to do that. Because once you start getting into this stuff, mortgage rates start to move, you start to pay more because you're playing plus prime. It could be prime plus 2, prime plus 3, you know? Anyways, I want to know what you guys think about this because this is a huge deal. Why are interest rates going up all of a sudden now? I could bet you anything you want. Anything you want. Now that Donald Trump is president of the United States, interest rates, I think, went up 5 or 6 times with him on the watch. The Feds raised the rates because it's Donald Trump. It's so easy to blame him for anything. Now, Canada needs to catch up and say, we have to stimulate our economy. We're not exporting. We're not fabricating like we used to. We're not, the oil provinces are filing for bankruptcies. We are in a heap of trouble here in Canada, so we got to stimulate our economy instead of creating jobs and mining jobs and, you know, building strong unions and restarting from scratch and building, you know, giving money to proprietors to start putting their ideas from paper to fabrication to export. It's not happening. So instead of doing that, they have to raise taxes on a lot of things. And I'm not going into the tax thing right now. I'm not going there right now because there's a lot going on with the tax thing, with the tax hikes going on in the last couple of week and a half ago in the news here. Rising interest rate could spell trouble. So now, I want to ask you guys this question. If the other person won the election in the States, not Trump, but the other person, if I say her name, my video will get flagged. I could bet you anything you want, they would have never touched interest rates and they would never go up because she's on the watch. But they will need, it's so convenient to raise interest rates now in the U.S. because Trump is president. So, exactly. We need to invest in high-tech jobs in Canada, not old industry. Old industries, too, are good because it creates exports. And a thriving economy needs exports because old industry leads to fabrication, fabrication leads to production, and production leads to exports. Exports grows GDP. It's very simple. You know what I'm saying? But I'm just reading the comments as I'm going here. Let's read this article. When the Bank of Canada raised its key overnight lending rate on Wednesday, the second interest hike in 2 months. So this is the second we're talking about, folks. The central bank also raised a concern over household indebtedness. In its news release, it said, given the evaluated household indebtedness, close attention will be paid to sensitivity of the economy to higher interest rates. That's because each time a bank raises rates, lenders immediately pass them on to borrowers. Where else it's going to go? To the moon? Or from heaven? Who hold products based on the prime rate, like variable rate mortgages and home equity lines of credits, HELOCs, and their interest cost group. So everyone that bought that shining USUV and that beautiful cottage and all that, and they're buying it off the coattails of your mortgage. Your equity, you're supposed to save that for your grandkids and put them through school. The equity was supposed to be saved to buy your motorhome and travel across the country. That equity is supposed to be saved so when you sell your home one day and retire, you could buy that motorhome and have no ties, or your sailboat and sail around the world. But no, it's going to go back to paying other lines of credit and vehicles and all the crap you bought that you didn't need. For the rush of Canadians who have borrowed against their equity in their homes and tapped the HELOC, who cares? In recent years, ultra-low interest rates are likely a deciding factor. Remember, free money. You remember Max Kaiser? He kept saying, free money, free money, free money, free money. Free money. But who's going to clean the mess? The working poor. The working poor is going to clean the mess. Not the rich. Not the homeless. The working poor that's already indebted. In huge debt. The amount of money Canadians borrowed against equity in their homes has been surging since the start of 2016. Look at this, people. We are at, the graph is not loading, so I'm going to try and see if I could figure out where the graph goes. Okay, it's going up. Wow. Wow, it's going up here. So, wow. 223 billion. It's been fairly easy for consumers to justify in their minds, said Scott. Ha ha ha. Han ha. I can't read. The president of the Credit Counseling Society, which has offices across Canada, there really is a very little motivation to save. It'd be easier to take out whatever line of credit. But remember, guys, home equity line of credit is not, you did not win the lottery. You have to pay it back. And they like to give it different names and massage the name so it sounds like it's something good for you. But in reality, it's eating you dry. And what it is, it's sucking everything that you've tried to build. You know what I'm saying? Yes, Tyler, my man Tyler's commenting, the working poor will clean up the mess with bank bail-ins. Of course. You know? And let's move on. Toronto real estate prices are falling and bankruptcies are on the rise. Wait a minute. I thought 2 shows ago or 3 shows ago that bankruptcies were under control. Why? Because their lines of credit are getting dry. Unsecured debt's being maxed out. And people with unsecured debt, if you own a home, you could get sued. You need to understand this. There's a 90% chance you will get sued for the money. If you own a home and you have unsecured debt and you think I'm going to file for personal bankruptcy and blah, 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 they can still come after you if you're a homeowner. So be very careful. Talk to your bankruptcy lawyers if you are planning to file for bankruptcy or insolvency. So Margaret O'Brien's commenting, maybe the people who have been shut out of the housing market may not feel so bad about themselves now. At least they are not burdened with unpayable debt. So yeah, I mean, yeah, this is huge. You know, like a lot of historically, when countries got in, or people or countries, back in the day, it was more of a country getting more into debt as opposed to its citizens. Because back in the day, during World War I and up until the start of World War II, it wasn't that common it was very common for someone to save up and buy a car. It was very common for someone to save up and just buy a house back in those times. Back in those days, it was more the countries that got themselves into debt with bad deals and whatever. So what was the key to solve these debt crises? Going to war. I wouldn't be surprised if there's another war on the horizon. I would not be surprised. And yeah, and Walking Journey is commenting, Wells Fargo Bank just sent me an American Express credit card. I'm sure if that's good. I'm not sure if that's good or bad. Do me a favor. Walking Journey. Don't use that credit card. You don't want credits. Credit means it's a fancy word, basically. You owe me. Let's make up an acronym, guys, today in the comments for credit. 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 Let's make up an acronym. for credit what it really means, okay? It's a lot of letters, but I'm pretty sure that credit means something. So Mary DeSetis is commenting here. Property tax unpaid, $13 million in arrears in Barrie. Very, 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 very believable. 1,000,000%. Because I don't know if you guys been out east, and I'm not talking about New York, and I'm not talking about Chicago. I'm talking about Ontario. Property tax is so high there. It's what same people pay in rent in Winnipeg. And I know you're probably laughing watching this, like, oh, who's going to pay? I think my mother, she lives in the Toronto area, and I think she's paying right now in property tax close to $600 a month in property tax, or $700 a month, if I'm not mistaken. I could ask her. But she's paying anywhere from $600 to $700 a month in property taxes. So that's what some people pay in the Winnipeg, like small towns in Manitoba, small towns in Regina, Saskatchewan. That's what people pay in rent. Never mind property tax. So let's keep going here. I am talking too much. So this is it right here, guys. The great city of Toronto. Toronto bankruptcies jump almost 5% in June. Here's where was impacted the most. Bankruptcies in Toronto are on the rise, bucking a national trend. Our analysis of consumer bankruptcy filings showed 824 bankruptcy filings with Greater Toronto postal codes in June 2017 with a 4.16%. It's kind of funny because the area code in Toronto is 416. And the filings are 4.16%. Very interesting. Increases from the same month last year. Total outstanding liabilities in these filings added up to $441 million against $7.32 million in assets. Toronto real estate prices are taking a dive. The benchmark composite price in the city is now $755 large, which is a 7.4% decline from the May peak. Prices are up 4.25% from the same month last year, however, which is still a generous gain. But the people that bought in the last year are toast. Vancouver. The price of a home in Vancouver still on the rise in August 2017 saw the composite benchmark for the price of a typical home to rise to $1.29 million. Move over. I keep watching, reminiscing on Chuck Norris's house that he sold in Atlanta. He was asking $1 million. I think he got like $750 for it. It was a beautiful house with a pool, gigantic house. Move over, Chuck Norris. If you see one of these houses that are selling for that much, you'll have a heart attack. You probably can't even eat a meal in there. It's so bad. This is a 10% increase from the month before and a 10.5% increase from the same month last year. BC's first-time homebuyer loan helped give a lift to declining sales this year, but applications have slowed dramatically. The province has now received 2,623 applications. This means that the pace of applicants being filed have slowed 29% in the first quarter. Remember the free money they said they were giving away? But in reality, you got to pay it back with this bizarre payment plans. It's almost like when you walk into one of those Leon's or the Brick and don't pay a cent event, and don't pay for 2 years, or don't make a payment for a year or 3 years. In all fairness, if you miss or you don't pay it off before, oh my God, the fees and all the payments you have to make. Oh my God, you have no idea. But when you start getting these great offers that are too good to be true, you got to read the fine print. You know what I'm saying? All right. How soft are Toronto real estate ask prices this month? Asked the City of Toronto. Toronto real estate prices are kind of wobbly, and social media has been filled with claims that places are selling substantially under ask. We thought we'd take a look through TREB sold numbers. We see if there's any truth in this claim. Looking at last week's sales from September 2nd to September 8th, yes, ask prices are softer than they were last year. However, they're probably not soft enough to start screaming from the rooftop. September 2016 saw a sales price of 104% of ask. Last week sold an ask ratio down from last year. In September 2016, the average sold to ask price ratio was 104%. This means homes were selling for 4% more than buyers were asking for on average. Last week's sold data shows that the sold home fetched an average 98.78% of the asking price. So people are walking away unscathed. Yeah, so there's a lot of people. Wow. Holy smokes, commenting here. Walking Journey saying, in Texas, we have an income tax. It's called property tax. That's why I live in a single wide mobile home on 3 acres of land. Yeah, Walking Journey's got lots of land there. Kevin saying, property tax in my area, Long Island, New York. Median is about $12,000 US per year in taxes on land you own. Steve the Plumber, this beep hole homes that are over $1 million in Toronto are not worth it at all. They have nub and tub electrical, bad water, clay damage, and a cost a fortune to heat. Exactly, Steve. When you look at, if you look up Chuck Norris's house for sale, just look that up on Google and look at images. That house sold for almost nothing. Madonna's house, I think Madonna recently, a few years back, sold a house for next to nothing. Like, it's crazy what you're paying for. $1 million house is pillars and grand crown moldings inside and chair rail moldings inside the house. Long corridors going to God knows where and gigantic front entrance with an electric gate. That's $1 million house. Not some Mickey Mouse gumshoed, put a plastic tarp on the roof to avoid leaks in the house, replace all the windows in the house, foundations cracking. It's a piece of crap. Anyways, I was commenting here. Wow, so many people. Walking Journey is saying, Kevin, the government owns everything. I paid $400 last year. That's not bad for 3 acres of land. It's not too bad. Walking Journey. Mr. Robot says, do you think Canada will declare bankruptcy and will America buy Canada? Well, that won't work because the United States is $20 trillion in debt. Its deficit is enormous. And yeah, it's kind of a problem for that. I don't get, the US can't buy anything. So if it does, it'll just drown itself into more debt. And someone's asking if I have cryptocurrency. No, I don't. Not as yet. I invest more in silver because silver is going up, if you guys have been paying attention. Somebody else is commenting here. Sorry, guys. My windows are all over the place here. Damn you. Oh, there it is. Okay. And a few years ago, you could buy a home in Barrie for $350,000 or under. Now they are asking $750,000 and up. Yep. It's knob and tube. Yes. And what is your yearly tax on the house in Merritt, Mike? I am paying right now, I think it was $1,950, almost just under $2,000 a year. So it works out to $160 a month, I think, or $158 a month. But we do have good services. I'm not going to lie about that. We have garbage pickup. We got a lot of things going. So it's not just, just pay the taxes. No, we got a street cleanup. They clean up here every 2 weeks. There's a street cleaner coming through. We got all the signs and all street lines being painted, putting flowers in the ground, planting trees. For what I pay, it's worth it. And schools and everything. The schools are pretty decent up here. So, Okay, let's continue here. So that's what's happening in Toronto. There's a very detailed graph here if you guys want to continue reading this. So it's saying here, homes between $750,000 and $1 million are going over asking prices. Not all price brackets are created equal. Homes sold with an ask price of the range of $750,000 to $1 million fetch the average of 100.5% of sticker. Homes asking less than $500,000 large ask to fetch of 99.28% of ask. Agents are either pricing the homes sold in the range perfectly and the buyers aren't hagglers, or there's still competition in the price ranges. I think it has to do more with foreign investing. So let's move on. This is a really good one. Mainland Chinese real estate buyers continue to dry up. So, just like I said last time, China needs to put a cap on what's happening in its country because a majority of its wealth is flooding out its doors. Their wealth is leaving so fast that they're having a really hard time to make up certain deficits in China. But coming towards the end of the show, China's got something that Iran has tried, Venezuela has tried, God, who else? Iraq, and who's the other guys there? Libya has tried, and it will be at the end of the show. I'll discuss this and to kind of fill its deficit of fortune leaving the country. So this is what I think. It's my opinion. Mike Martins, do you have a homeowners? No, I live in a detached home, private land. I don't have homeowners association. Someone's asking, what's my electricity bill like? Oh God, like $70 a month. 80 bucks. I think I just paid was it $85 for my electricity? I think. And plus, my Living the Dream series. Stay tuned to that series, because I'm getting all the windows redone in the house. I'm going to get some nice state-of-the-art, good weather, insulated windows, soundproof. I'm going to pick them up. I went up to the Porn Depot, so I'm going to go pick up windows up there. They're going to come and take measurements this week. So I'm going to make a video on that. Follow me on my Living the Dream series. Let's continue with this article. Mainland Chinese drying up. Okay. Still hearing rumors that mainland Chinese buyers are gobbling up every piece of real estate in sight? Probably not, because they aren't. New numbers from the People's Bank of China, PBOC, show that China's fresh capital controls have sent reserves higher for another month. Who gives a SHI whatever about China's forex reserves? You should. Despite China being a massive country, it does not have fully convertible currency. The local yuan, is just useless paper that has no value unless recognized by the People's Bank of China. In order to buy anything internationally, the yuan needs to be exchanged into a convertible currency, like the US dollar. The convertible currency mostly comes from the pile of amassed in the People's Republic of China foreign exchange reserves. When it swells, there's less money leaving the country than entering. This is what I was talking about earlier. When it drops, it means that more money is leaving the country than entering it. There's a little more to it, but we've already covered this, so check this out for if you have any questions. Basically, it's a pretty good measure of how people are spending their money, or more accurately, since January 2017, it's a good measure of how the government controls what locals will buy outside the country. So there's the foreign exchange reserves in trillions. So this is in trillions, people. Look at that, $3.64 trillion, and it's dipped. And it's going down. I think it's going to go up a bit, and then go back down, and then go back down, till it goes to $300. Foreign exchange reserves rise to the highest since October 2016. So this goes back into that. The other article that I read for you guys 2-3 shows ago. Let's move on. Let me just take a sip of water here, read some comments. I want to thank also everyone that's listening to this show. Someone's podcasting this show in different places, and a lot of people listening to it on the mills, work sites. People having this on and listening to me talk. I'm really grateful that someone, I don't know who it is, so if it's you, can you please say hi to me or let me know who it's doing this into podcast format and getting my channel out there, or just getting the news out there, or getting, and my offer still stands if you, mention me in your videos and housing, so we can start, I really want to start organizing more of an underground housing news network where we're all we all know each other, we all know what's happening, we all understand, and we could properly inform people on what's really happening, because I think it's very important that we create some sort of an organization. So mention other channels on your channel and then get them to mention you. So maybe we could get a little bit of noise going on, you know what I'm saying? Because I'm feeling that this housing crisis, as it gets worse, it's going to start going underground. And people are going to wake up and say, whoa, what the hell is going on here? You know what I'm saying? Chinese investors discover Sleepy Point Roberts, Washington on BC border. So a lot of investors are moving to this area. And I've been telling you guys that Washington State has been having a massive influx of foreign investors coming in. They're flying them in. They're paying for their hotels. They're giving them brochures in Chinese and different Mandarin and different languages so people could know what to buy, where to buy, and how to buy. And it just, you know, it's crazy what's happening. For decades, the sleepy U.S. backwater of Point Roberts, Washington has been overrun by foreigners/Canadians. They've come to buy recreational property, buy cheap gas, dairy products, and drink way too much beer at the breakers of Kinky's Reef Tavern on the Strait of Georgia waterfront. More recently, as the value of Canadian dollar dictates, they've also come down to collect online purchases from shipping and receiving outlets, some so close to the border that individuals can walk across to get their parcels. Today, a new wave of foreigners is hitting the scenic shores of Point Roberts, south of Tawasin. Chinese investors buying up a marina. I'm sorry, guys. I'm so sorry. Buying up a marina, golf course, and waterfront property for housing developments. But then what happens to the golf course and all that stuff? What happens to that? Do people play golf anymore? Businessman Wayne Colonels, a Canadian-U.S. citizen who's lived in Point Roberts for 25 years and has a finger in all the big projects, believes that the Chinese buyers could be the economic savior for the 13 square kilometer peninsula. I believe so. Thank goodness, he said. Their money is coming into Point Roberts, which we desperately need. I hope he's going to move out soon because he probably won't be able to afford to live there anymore. We've seen a whole bunch of activity. Point Roberts will be much different 5 years from now. While the vast majority of property buyers in Point Roberts remain non-Chinese, most people looking for relatively inexpensive recreational homes. They don't represent big-ticket property buyers. They, Chinese, are looking for good opportunities, and Point Roberts has just been sitting there. Knowles said, it's been a diamond in the rough forever. People are finally coming down here and seeing how beautiful it is. Others are taking a more cautious approach. Point Roberts has always had economic ups and downs, but little ultimately changes. So it's a long article, very long article. It's very long. You guys could read it on your own. Basically, they're going to buy out everyone that lives there. What's going to happen is people just won't be able to afford to live there anymore and move on, just like anywhere else. You know what I'm saying? But Washington State is on fire when it comes to real estate. Their real estate is going up like you would not believe. Tacoma, Washington's like Buffalo, New York. So people that have been to Buffalo know what Tacoma looks like. It's a place, is all I can say. And yeah, but housing there is like the second most expensive in the United States, second most rising in the United States. You know what I'm saying? Okay, wow, there's so many articles here. Gas, 2008, 145, and the dollar was 98 cents. And gas on the dollar was 76 cents. That's why I'm working on a deep chart for the truth. The last 10 years of fraud. God bless Mike, the real champ. Steve the plumber. The Asian and foreign buyers that bought in Toronto are now either trying to rent out their vacant properties or trying to sell them. I wonder why that is. And then Walking Journey is saying, I keep my bills to a minimum. I usually average $150 for my light bill. I pay about $81 a month for my homeowner's insurance, and that's it. If I wanted to pay it, I usually pay about $30 a month for trash. And then Tyler goes on to say, we need more people like Mike Martins bringing some real truth about all this housing craziness. It's going underground. I don't know. This stuff should be point blank front page, not what Britney Spears was wearing on some promotion or something, or I don't even want to Oscars, or who won an Oscar for best film, or who won an Oscar. Nobody cares. This is not affecting these Oscars winners and all these people and this a lot of sports is okay, but getting too deep into the sports, oh God, it's like these people aren't paying your bills. You know what I'm saying? Let's move on. Investors dumping Metro Vancouver homes at cost as prices plummet. Oh yeah. If you're listening to this on audio, I just took a sip of my drink. I'm talking too much. But this is a good one. Investors dumping Metro Vancouver homes at cost as prices plummet. Okay, let's start this again. Investors who bought real estate in Metro Vancouver last year at the peak are dumping them at cost to bail from the market in a hurry as prices continue to tumble, recent property listings show. The dumping is most noticeable in the detached house segment, where prices have been plunging since the peaking in May of this year. The average price for a single-family home has plummeted 12% from $1.83 million, $1.83 million for a single detached home, to $1.61 million in 3 months since May. That's a huge, huge drop. In one case, businessman Bai Nan Lai bought a property at 4,735 Shepherd Street in Burnaby in June in 2016 for $2.1 million, according to the BC assessment. The property is now on the market for $2.18 million, meaning that the Bai Nan Lai would not be making a profit off the sale. Another businessman, Mingyung Chu, bought a property at 4,582 Sunland Place in Burnaby in March 2016, and now is selling it for $1.3 million, and now is selling it, bought it for $1.3 million, now is selling it for $1.38 million. So this is going into Cesar Augusto Orlenio Morelios is trying to sell his property, 505 Rupert Street, Vancouver, what he bought for $1.05 million. I was asking for it for $1.8 million, $1.08 million. So, but it may take. It might be too late for these investors who are trying to flee Metro Vancouver real estate market, as some houses are being dumped and have been on the market for 100 days, suggesting that many investors who bought last year during the real estate frenzy will be left holding the bag. Especially for the people, I really feel for the people that bought, that were worried to be bought out of the market, the people that were worried that they will never own anything and bought into this frenziness a year ago. And it's the working poor that are going to have to basically deal with this. When there's a major crash, there's crashes in everything. You know what I'm saying? There's crashes in orange juice. If the crop goes bad in Florida and there's a cold front that comes in, price of orange juice goes up. You know what I'm saying? It happens in everything. You know, price of coffee goes up and down depending on the crop and rotation and what's happening, you know. But people are not, people think housing is immune. Housing is going to keep going up. You know, anything that keeps going up to me, I think, is debt. Debt is the only thing that keeps going up. The Metro Vancouver housing market continues to show strong evidence of problematic conditions due to moderate evidence of price acceleration and strong evidence of overvaluation. Of course, overvaluated. Give me a break. Canada Mortgage and Housing Corporation warned in its 2017 third quarter housing market assessment, overvaluation is detected when housing prices remain significantly above levels warranted by the fundamental drivers of housing markets such as income, population, actual and expended financing costs, according to CMHC. Why didn't they put stress tests into place when people bought places from day one? This is a video channel. Kind of want to bring up to you guys, if you guys want to look it up. Vancouver housing crisis, when will it crash? The video only has 1,600 views. I really want you guys to watch this because somebody brought this to my attention yesterday. One of my subscribers brought this up to me, messaged me on Facebook to tell me this, and basically told me that everything I'm saying in this video is coming to light. And I want to know what you guys think about this. It's an old video. It's from last year at this time, around this time, and it's interesting. And I kind of look back a year ago what I said, and it's interesting how I see the perspective on things and how most of my perspectives have not changed. And yeah, let's keep going. Okay, so Seattle. So Seattle's having a problem now, you know. Proposed Seattle taxes targeting foreign buyers' investment properties take fire. I told you it was going to happen. They're flying in people. They're flying in investors. Oh, come on, buy 30, 40 homes, you know. Look at that. Seattle. A candidate for Seattle's mayor says the city should consider taxing non-resident home buyers, and a city council member has looked into it. But city lawyers say it would be illegal. And the King County assessor says it could stoke discrimination. As Seattle leaders debate whether to tax overseas buyers or vacant homes to cool the housing market, the city attorney's office has declared both proposals illegal. Well, they did it in Vancouver. I guess they did it in France. France is charging, like, I don't know, look up the article if you want. It's on file. It's on Google. Look it up. They're charging, I think it's like 60% of, like, it's crazy in France. In France is just, because there's so many vacant homes in France that they're starting to tax the crap out of them. You know what I'm saying? And King County assessor has denounced the entire approach, saying that such taxes are unneeded and could stoke anti-Asian sentiments. Very interesting. British Columbia began taxing foreign buyers and empty investor properties in pricey Vancouver last year, and Seattle leaders have quietly been considering a similar plans. Of Mayor finalist Cray Moon has made them a signature issue. Concerned about the house prices here, City Council members Lisa Herbold recently asked the City Attorney Pete Holmes if taxes on foreign investors and vacant properties would be possible under local laws. The answer was no. So you see what's happening. Do you guys see what's happening? This is nuts. And but Wilson asked last week strongly criticized her request, saying it could stigmatize people from China who make up a high share of overseas buyers in Seattle. But why do you want so much foreign investors in one city? I can understand people coming in, investing from all over the world. I get it. It's a thing. You know what I'm saying? But why would a city want to make up a percentage of their city of investments? It's going to get out of control pricing. No one could live there anymore, and everyone's going to start leaving. And don't go to Tacoma, because it's even higher in Tacoma. In a written response, Herbold last week, the assessor said he would refuse to collect the buyer identity and data the council member was asking for. I would not support any policy response that could lead to racial bias or anything that smacks the Chinese exclusion laws from 2 centuries ago, Wilson said. So it's a long article. I want you guys to read this one on your own too. It's from the Seattle Times. I want you guys to weigh in on this and tell me what you guys think. Yeah, people are investing, but why would you want, you know what I'm saying? Like think of it in a vice versa look at it. If a bunch of us went to China, for example, and started to invest in China and buying a property and land, and the government is allowing it, but I think the people living there won't appreciate it too much if they start seeing my face there and a bunch of other people. They won't want to look at us. You know what I'm saying? I'm not saying that it's just traditional. They have countries have ways of doing things. And I think if there was a takeover in that sense, in the reverse, I just think it would be a different story. You know, I mean, let me know if you agree or disagree on that. All right, let's keep going. Housing affordability lessons from Vancouver for the city of Sydney. Yes, this is a Sydney article. This is from the Sydney Morning Herald. And I've been tying in the two cities. I don't know how long now, many years, I've been tying in these two cities of Sydney and Vancouver and people being bought out. It is a city that cresting golden wave. Global capital is pouring in. The population is booming. The state government is turning huge surpluses. Meanwhile, housing prices have accelerated at an unimaginable pace, pricing out everyone from the most vulnerable to those with professional jobs. Yeah, doctors. There's surgeons, there's plastic surgeons. There's people that have been in business for years and they can't afford to live in their own city. The Australian proper is toast. The Australian proper, I mean, all you need to do to start a new town, move 200 miles out of the city, close to the coast, somewhere nice, get 5-6 doctors to open a clinic, open a fire station, open a police station, and then start building low-rise condos, and you start seeing people move in like crazy. You know, once you start getting a balance, some farming or some mining or something, or fishing off the coast. I don't know. I'm just putting things out there. Meanwhile, house prices have accelerated to unimaginable pace, pricing out everyone from the most vulnerable. I read this already. Most people have to move on to the city streets. Homelessness is up. Sound familiar? The city is not Sydney, but Vancouver. It's been grappling a housing affordability crisis for over a decade. So when I tell people that it's been happening for the last 10 years, they look at me, it's like, you're retarded. What are you talking about the last 10 years? Yes, it's been the last 10 years, leaving it mired in the same problems that now grip Sydney and dominate conversations from backyard barbecue to country's highest paid policy workers. Yes, it's the talk of the town. You're on the train, on a bus, waiting in line to buy groceries. Everyone's talking about the housing prices. It's the biggest thing since the invention of anything. I mean, it's the biggest talked about discussion. Vancouver Mayor Gregor Roberts now is in his 9th year in office, a tenure that has been dominated by worsening crisis. Can't spot the parallels with Sydney from a mile away. It took cities like New York and London to a generation of global capital influx to skew the real estate prices. Vancouver has happened in a decade at the most, he said. My sense is Sydney is in similar predicament. Of course it is. Part of the problem, he said, is that Australia and Canada were way behind in innovation in government, and the cities were left with few real policies levels to tackle the issues. I just honestly think that these countries, free market, we're selling out to the highest bidder. You know, free markets are selling out to the highest bidder, and they don't care who or where you're from. They don't care if you're Chinese, Indian, you're from Russia. They don't care. It's money talks, right? And how does money talk? Why is money talking? And why is it mainly coming from China? Because we shipped all our jobs to China. We shipped all our infrastructure to China. We shipped everything to China. You know, in return, what do we get back? Cheaply made products. You know what I'm saying? And we made their country rich. We made the fabrication, the production, the export, the GDP rich for companies being greedy here and wanting to export jobs there for lower paying jobs. And, you know, they didn't want to do it to Mexico, because if they did it to Mexico, Mexico would become rich, super rich. And you'd have Mexicans touring all over North America, buying homes, but they didn't want that to happen. So they wanted to, best case scenario was move it out to China. It's further away. It wouldn't affect us here. Now, the GDP, the growth, the wealth, everything's hitting China, and we're losing the jobs here. We're not keeping up to pace. We're the ones that are supposed to be going 100 years ago. Our founding fathers or whoever, the government at the time, would roll in their graves if they knew that communist China at the time, during World War II and Mao Zedong and all that those guys were coming here to buy us out. They wouldn't believe it, but today it's happening. Why? Because we sold out, and that's our fault, right? And yeah, I'm gonna make a series to maybe do a series together. What does it mean to be Canadian anymore? You know, like what is it? You know. Anyways, so that's what's happening right now with Sydney. Sydney, it's the almighty buck, you know, and all the economy was shipped out to China for cheaper labor and cheaply made products, and that's what happened. Plain and simple. You know, it's China because it's China. But if it was Japan, it would have been Japan. If it was Saudi Arabia, it'd be Saudi Arabia. But that's what they decided how it would be done, and that's what we're dealing with today. You know what I'm saying? Opinion: don't blame Airbnb for housing unaffordability. Not at fault. People are claiming Sydney's housing affordability crisis is the fault of home sharing, generally Airbnb specified. I want you guys, a long article, I'm not reading it, but I want you guys to weigh in and let me know, is Airbnb at fault? I don't think so. You know why? Because people are finding a place to sleep. I think people are finding a place to sleep. Hotels have to be more competitive with rates. Because once hotels become more competitive with rates, Airbnb becomes more honest, and hotels become more honest. I think this is good. I think it's good to a point where people have a place to sleep. Let's move on to the Herald Sun. And let me pause this here. Aussie dream shouldn't be out of reach. So people living down under in Australia that follow my channel, there's lots of people that follow my channel, and there's a couple of channels and there's a couple of news sources that rebroadcast my channel down in Australia, which is really nice. They rebroadcast some of my clips. They don't play the whole long show because it's a long drawn out show. People in Australia have been watching it and liking what I have to say and referring to the Australians as Australian proper, because every country has its own sovereignty and identity, right? And the people that are suffering the most are the Australian proper, three-time generation Australian. They're in a lot of trouble right now. You don't need to live in Melbourne to appreciate that a major cost of living concern for many Australians is that of housing. That's why the federal government is delivering comprehensive housing affordability plan designed to improve outcome across the housing spectrum, from first home buyers to those who rent, to older Australians who are looking to downsize, to those in community and social housing, and those who are enduring homelessness. A number of measures in the housing affordability package announced in the budget that have already kicked in. And last week, I introduced a legislation into Parliament for measures directing towards prospective first home-time buyers and downsizers, as well as measures to clamp down on inappropriate deductions claimed by investors in property. The government knows that people who are trying to break into the Melbourne property market are faced with unbelievable task of trudging from one auction to another while watching property prices rise more quickly than the ability to save for a deposit. I don't know if you guys remember the article I read for you guys. Oh God, it was a while back. It was maybe 3, 4, 5, 7 shows ago. I gotta find it. It's actually pretty good. It was a good article saying that bank teller that works for one of the major banks has to save 26 years to make a bank deposit on a deposit on a condo. So I guess the bank teller knows people in the bank, knows the lenders and stuff, and basically maybe calculated what he could save, how much he's making, and blah blah blah. And it came out to 20 some odd years to make a deposit. Where 7 years ago, people were paying their houses off in 5 years. That generated wealth because that created more disposable income. When you could pay your house off in 5 years, hey, I'm buying a cottage. Hey, I'm buying a boat. Hey, well, they got to fabricate, make that boat. Hey, someone's got to build that cottage. Hey, someone's got to service that cottage. Hey, that creates more jobs. But no, it stops at the house. And if you're lucky, you'll have that paid off. So, in fact, we know that Melbourne, it takes someone on average income more than 6 years to save for a 20% deposit. So in Melbourne, it takes 20, but we're talking about a home, like a home like this. not a one-bedroom condo. So while the government is repeatedly and rightly pointed out that problems in the housing market are not confined simply to the first home buyers, it's no surprise that such attention is focused on those who are trying to get a foot in the property ladder. Very long article, 2 videos to watch. I want you guys to watch this. I've been talking about Australia for years. Melbourne, Sydney. I've been talking about Auckland, New Zealand. And who's next? Auckland, New Zealand. And this was sent to me. Someone asked me to read this because this is some sort of a documentary. Another housing documentary, but it's good to get the word out. It's good to share knowledge. Who owns New Zealand now? New documentary tackles our housing crisis. So, veteran journalist Brian Bruce investigates the housing crisis in the documentary Who Owns New Zealand Now. Really recommend everyone to get out and see this, or find a way to see this, or stream it, or find it, download it. I don't care. Watch it. The timing of the new documentary screening 3 days on Tuesday, September 12th, just 11 days before the election, can hardly be a coincidence. So platforms, presidential government platforms. If you're running for government of New Zealand, Australia, Canada, your number one platform you address is housing affordability. Not economy, not schooling, not small business, not farming, not agriculture. The second people could afford to live, then that frees up more money, and then that middle class grows and thrives and could afford to carry the poor, and the working class, middle class could afford to pay the taxes so the rich don't have to pay it. That's usually how it works. That's what we've been living in for the last 100 years. Fronted by a new renowned investigative Kiwi journalist, Brian Bruce, the New Zealand on-air funded documentary Who Owns New Zealand Now sets out to answer some leading questions, notably. Do we believe that homeownership is a right, or that housing is a right, or buying a house, or buying houses? Why is it that housing has become so unaffordable for people on average incomes? Exactly what impact is foreign money, notably from China, having on house prices? Should housing be seen as a vital infrastructure, just like roading and schools? So basically, it goes into looking at whether or not, or finding ways and solutions for housing crisis. But there's so much land. There's so much, the world's a big place, people. When you're flying on an airplane, okay, and you look out the window, look at how much space you don't see houses. Okay, you don't see houses. You see a city, a little town, and then fly another 20, 30 minutes. Oh, there's another little town. There's lots of land to build on. And he looks at different ways, whether or not housing is, why is it unaffordable? Is it something that people should want to have nowadays? Is it a necessity? Or is housing going out? Like the Walkman and the VCR, I don't know. I'm going to watch this for sure. I want you guys to take a look at this and tell me what you guys think. It's he's a good journalist from what I've heard from some of the stories I've read in the past that he's written. Let's continue. We don't have anything. Landlords demand rent on flooded Houston homes. So I want to thank Deborah from New York sent me this. She told me that her mother is living in Houston. She's renting there. Her mother and her sister are living there. This is what she told me. And the landlord's demanding rent on the flooded apartment, like flooded home. It's like, it's crazy. Displaced family, you can't go to work. And if you can't go to work, it's your lifeline. You can't pay your rent. If you can't pay your rent, you're homeless. Displaced families say that they are struggling to pay rent on damaged dwellings as an acute housing crisis grips southeast Texas after Hurricane Harvey. Rocio Fuentes weighed up the cost of getting some new sofas for her new apartment in Pasadena. That's in Texas, people. There's another Pasadena. And decided the family budget could just about stretch it. Just 1 month after moving in, Hurricane Harvey swept through, and the Fuenteses were left not only with the ruined furniture, but also an ongoing rental demand for a dwelling they had to flee. At first, we didn't think it would be that bad, but then the water came through the wall and up through the carpet, Fuentes said. Once we saw the water wasn't going to stop, we left. Fuentes, her husband, Jamie, and her 5 children, 5 kids, in a storm like this, oh God. I feel for these people big time. Ages ranging from 7 months to 14 years were plucked from floodwaters by her mother, who arrived in a truck. They are now crammed into her sister's apartment and with no insurance have little idea where they will live next. Jamie is unable to earn money because his construction job has been paused due to the flooding. But while everything has changed for this family, they are still expected to pay for their abandoned home. Our landlords say we have to pay the rent and late fees, and every day it's going up, Fuentes says. We are paying rent for somewhere we can't live in. They said, you aren't the only ones in this situation, but what are we supposed to do? We don't have any money and we don't have anything. Man, you got to feel for people that lose everything, man. You know, family photos, heirlooms, a lot of things people lose. Clothing, material, like important material thing, a bed to sleep on, a car to drive you to work gets ruined when it's underwater. You know what I'm saying? An acute housing crisis is starting to grip thousands of families in southeast Texas as the floodwaters ebb away. With the death toll put at 60 on Monday, more than 180,000 houses in the Houston area have been badly damaged, with only a fraction of occupants owning any flood insurance. And under Texas law, rent must be paid on damaged dwellings unless they are deemed completely uninhabitable. Okay, guys, this is uninhabitable. You're going to have mold. You're going to have stuff growing in the walls. How could this be habitable? Very long article, too. I want you guys to weigh in with your look at this. It's so sad. So sad. 120 billion. 120 billion to exceed Hurricane Katrina. It's horrible. I feel really bad for it. This is a long article. You guys get some time in the day, read it. Now, this is the last article I wanted to bring out to you guys, because Venezuela has been talking about this, and this is, I think, a way that China is gonna save its runaway or runoff on its wealth that's leaving China. China readies yuan-priced crude oil benchmark backed by gold. So they're going to be purchasing oil with their currency, and it's going to be backed by gold. So it's going to have a security standard. It's not backed by nothing. It's not fiat currency. They're using gold-backed currency, which we should have had in the first place. The world's top oil importer, China, is preparing to launch a crude oil futures contract denominated in Chinese yuan and convertible into gold, potentially creating the most important Asian oil benchmark and allowing oil exports to bypass the US dollar. Do you remember what happened with Iraq, Saudi Arabia, all those countries that basically bypassed the US dollar? Libya tried to create a golden dinar. Any country, basically, that it's gotten into trouble, right? And the U.S. denominated benchmark by trading yuan, Nikkei Asian Review. Nikkei, sorry. The crude oil futures will be the first commodity contract in China open to foreign investment funds, trading houses, and oil firms. The circumvention of U.S. dollar trade could allow oil exports such as Russia and Iran, for example, to bypass the U.S. sanctions by trading in yuan, according to the Nikkei Asian Review. To make yuan denominated contract more attractive, China plans yuan to be fully convertible in gold on Shanghai and Hong Kong exchanges. Holy smokes. Oh. Remember the war everyone's been talking about that's going to happen, or war was looming, or big problems are going to be looming? It's an older article, so September 1st, 2017. I want to know what you guys think on this. This is a big deal. This is how I think China is going to back its housing or its runoff on its wealth leaving its country, with people buying housing in foreign countries and money leaving the country faster than you could imagine. I think they're going to recoup its loss by installing this system into place. I don't know how that's going to help the petrodollar. I don't see good things right now with this. Let me know what you guys think on this for sure. Comment below. Send me your links. And I want to thank Alexander from Las Cruces who watches my show, Deborah from New York, and everybody over at Better Dwelling that will always send me articles to read on my show. And yeah, they're gonna stay tuned with you guys. I'll be on again next week. I'm gonna make sure this video uploads. I am recording this video as we speak, so it's backed up now. So if it gets taken down, I might start using a different platform to reach my subscribers, because apparently I think what they're going to start doing is, if I want to talk about mechanic work, I have to be a licensed mechanic. If I want to talk about housing, I got to be a real estate agent. If I want to talk about carpentry, I need to be a carpenter. I don't know. I think that's what's going to be happening in the next couple of years, you know, for anyone to talk online anymore. I'm thinking that's where it's headed. Anyways, let me know what you guys think. Comment below. Thanks for watching. Thanks for your comments. Thanks for the support. Don't forget to mention me in a shout out in your video and send me the link, and I will mark it and get your channel out there too. Thanks for watching, guys, and don't forget to hit the subscribe button.